Right now, while most people are distracted, confused, or completely shaken out of the market, something very deliberate is happening behind the scenes. Silver miners are being crushed, not by accident, not because they are weak businesses, but because this phase is designed to break confidence. Prices are being pushed down, sentiment is being destroyed, and headlines are doing exactly what they are meant to do: scare retail investors out at the worst possible moment. This is the point in the cycle where smart money quietly steps in, and by the time the public realizes what happened, the move is already over. If you've ever wondered how insiders always seem to buy before the explosion, this is what it looks like. Let me be very clear from the start. What you're seeing in silver mining stocks right now is not normal market behavior. These companies are sitting on real assets, real metal, and in many cases stronger balance sheets than they had in previous cycles. Yet their stock prices are acting as if silver is dead forever. That disconnect is the signal. Markets don't move based on truth in the short term. They move based on psychology. And right now, the psychology is fear, frustration, and exhaustion. Before we go deeper, if you want clear, calm, no-noise insights like this that help you think long-term instead of reacting emotionally, make sure you like this video and subscribe to the channel. This is Wealth Wave, and here we focus on understanding the cycle before it becomes obvious. Doing that early is how you stay ahead, not how you chase. Now, let's talk about why silver miners are being hit so hard. Silver itself has been volatile, but miners are falling much more aggressively. That's not random. Mining stocks are leverage on the metal. When prices rise, miners usually rise faster. But the same works in reverse. When sentiment turns negative, miners are punished far beyond what fundamentals justify. Big players understand this. They know miners are where emotional damage happens fastest. So pressure is applied there first. Another important piece most people miss is cost structure. Over the last few years, many silver miners have already absorbed higher costs, cut waste, refinanced debt, and improved efficiency. That work doesn't show up in headlines. It shows up quietly on balance sheets. But price action ignores that because price is being used as a weapon. When stocks fall day after day, investors stop thinking and start reacting. They sell not because the story changed, but because the pain became unbearable. This is where insiders behave very differently from the public. Insiders don't buy excitement. They buy despair. They don't need perfect timing. They need maximum pessimism. And silver miners, right now, are sitting in that zone where nobody wants to talk about them anymore. That's not a coincidence. Historically, some of the biggest percentage moves in mining stocks start when trading volume dries up and interest collapses. Think back to previous cycles. Gold and silver never bottom when everyone agrees they are undervalued. They bottom when people give up on them completely, when commentators stop covering them, when investors say, maybe this just isn't going anywhere. That emotional exhaustion is what insiders wait for. It's quiet, uncomfortable, and boring. And that's exactly why it works. There's also the paper versus physical disconnect that keeps widening. Paper silver can be sold endlessly. Physical silver cannot. Miners operate in the physical world. They dig metal out of the ground. When paper prices are pushed down aggressively, it creates stress across the mining sector. But at the same time, physical demand quietly builds. Industrial use, solar, electronics, and strategic stockpiling don't stop just because price charts look ugly. The metal is still needed. The supply is still limited. This creates pressure that doesn't show up immediately. It builds silently. And when it finally releases, it happens fast. That's why insiders don't wait for confirmation. By the time confirmation shows up, the easy money is already gone. They accumulate when it feels wrong, not when it feels safe. Another factor is how narratives are controlled. When silver miners are down, you start seeing stories about poor management, dilution fears, geopolitical risks, and regulatory uncertainty. Some of those risks are real. Many are exaggerated. The goal isn't to lie outright. The goal is to amplify uncertainty so people hesitate. Hesitation leads to selling. Selling leads to lower prices. Lower prices justify more negative stories. It's a feedback loop. Meanwhile, insiders already understand that mining is cyclical by nature. They don't expect smooth charts. They expect chaos at turning points. And they plan around that chaos. Accumulation doesn't look dramatic. It looks boring. It looks like slow buying, small increases in ownership, and quiet positioning long before headlines change. What makes this moment especially interesting is the broader macro environment. Debt levels are high. Trust in currencies is weakening. Industrial demand for silver continues to grow. And yet mining stocks are priced as if none of that matters. That disconnect cannot last forever. Markets eventually reconcile reality with price. The only question is who is positioned before that happens. Most retail investors do the opposite. They wait for clarity. They wait for trend confirmation. They wait for good news. But by then, miners have already moved 50, 100, sometimes 200% off the lows. At that point, the risk-reward flips. Early fear becomes late-stage excitement. And excitement is where most people buy. Right now, silver miners are not exciting. They are frustrating. They test patience. They make you question your thesis. That's exactly why insiders are comfortable here. They are not looking at today's chart. They are looking at supply constraints, long-term demand, and the inevitable re-rating that happens when sentiment turns. And sentiment always turns when the last seller is gone. When everyone who could panic has already panicked. When there's no one left to scare. That's when even small buying pressure can send prices sharply higher. Miners don't need massive inflows to move. They just need selling to stop. This is also why volatility is part of the process. Sharp drops are meant to shake weak hands. Sudden rallies are meant to confuse. The goal is emotional imbalance. Insiders thrive in that environment because they are detached from short-term noise. They already made their decision before the chaos started. If you're still watching at this point, you already understand something most people don't. Markets are not about intelligence alone. They are about emotional control. The ability to stay calm when others are panicking is what creates asymmetric opportunities. And silver miners right now are offering exactly that kind of setup. This doesn't mean prices go straight up tomorrow. It means accumulation happens before the move, not during it. It means the pain you see now is part of the transfer of ownership from impatient hands to patient ones. And once that transfer is complete, the tone of the market changes very quickly. That's why channels like Wealth Wave exist. Not to hype tops, not to chase momentum, but to help you recognize these quiet, uncomfortable phases before they turn loud. By the time everyone is talking about silver miners again, the real opportunity will already be behind us. As we move toward the end, I want you to think about this. Every major breakout you've ever seen was preceded by a period where holding felt pointless. That's not a flaw in the system. That is the system. The market rewards those who can sit through uncertainty, while others demand certainty. If this perspective helped you see the silver mining space differently, let me know in the comments. I want to hear whether you think this pressure is almost over, or if you believe the shakeout still has more to do. Share this video with someone who's frustrated with the market right now, because this is usually the moment people need clarity the most. And stay tuned, because when this wave turns, you'll want to already be positioned, not chasing it after the fact.